Good morning, everyone, and welcome to this morning's TreasuryONE webinar. It's really good to have you here. You are likely here because you have been reading your ghost mail and you've been taking note of some of the webinars that I try and encourage you to register for and attend. And of course, you'll know the TreasuryONE name from the daily updates that we get from the team on the Rand, on macroeconomics, on interest rates, inflation, all the stuff that causes really big swings, not just in equity values, but actually at the end of the day in our daily lives as well. And Vichard and I were chatting before we came on. So I wrote a ghost mail really early this morning. I'm trying this new thing where I go to bed a bit earlier and actually see if I can write more in the morning, see how it goes. But the point is the electricity was off. It came back at about 6 p.m. And I didn't actually realize. I basically forgot it had come back. And I just carried on working by rechargeable light for like another half an hour. The other day at home, I was walking around and I realized I was using my smartphone light as opposed to just flicking the light switch. And it actually makes you realize how shockingly accustomed we've become to having basically no electricity. It's remarkable. So I'm excited for this webinar because, I mean, the name says it all, right? Worst performing currency in the world. It's pretty awful. And you just have to look around you to understand why. WICHARD CILLIERS from TreasuryONE is going to do all of the smart talking this morning. I'm basically going to just keep an eye on the questions and we'll do a bit of a Q&A at the end and see what happens. But WICHARD, I'm going to hand over to you. Thank you for your time this morning. I think in helping all of us just get a better understanding of what's going on. Over to you.
Yes, thanks, Finance Guys. Yeah, good morning, everybody. I'm going to start sharing my screen like in the next minute or so. Obviously, like the title says, we are the worst performing currency in the world, except for a few other basket cases out there, like Pakistan and Argentina. Argentina has got inflation running at 150%, and the interest rates is at 97% after they hiked it by another 6% this week. So there's a few other basket cases, Lebanon, Pakistan, Argentina, but we're very close to them. So I'll go through the presentation now again. A lot of the stuff that I'm going to talk about is not unknown to everybody. It's all the usual issues. I'm just going to highlight it and just show you how stretch valuations and stuff are. But yeah, so I'm going to start sharing my screen. I'll take it away from there. Just let me know if you can see my screen. If not, but in any case. So like I said, the worst performer in the world and how much things can change in a week. So last week Tuesday, we walk into the office. The Rand was trading very nicely, sitting at like 18.20. Everything is still at 18.20. We're still very undervalued, but everything's hunky-dory. And all of a sudden, in the space of 4 days from Tuesday until Friday, we go from 18.20 up to this level of 19.50, the worst level we've seen the Rand trade in the history of the Rand. It surpassed the COVID worst levels of 1931. This morning, where we're currently trading is above those levels again. We're trading between this 1950 and 1951 range at the moment. And it was all a Rand-specific story. Hedge funds, real money managers, foreigners, everybody's been de-risking South Africa because they don't like the story about South African having ties with Russia. That's the main thing at the moment, is this political debacle we have with Russia has caused another 5.5% weakness in the currency. Then again, if you look at the interest rate market, and again, that's not good news for everybody that's got mortgages, got under a lot of debt, is in the space of a week, you can look at the gold line at the bottom. That was where it was in the beginning of last week. And 1 week later, you can see how much higher the market is pricing interest rates to go up. So that price is another 50 to 75 basis points of hikes in the coming months. We're expecting the Reserve Bank to at least hike by 50 basis points next week at the MPC. After that, maybe another 50 basis points. So we're expecting another maybe 100 basis points in the next month, in the next two meetings at the MPC before it starts to go off again, before we start seeing cuts. And you can see from this graph that how it's spiked. And the terminal rate's not pricing at 8% at the moment, but more to 9%. So, like I said, the SARB is still in hiking mode, but just to show you, one of the reasons why the Rand's also under pressure is you can still see in relation to other emerging markets out there. If you look at the black bold line there, you can see South African interest rates is now at the repo rate at 7.75. But if you look at where Peru and Hungary and Czech Republic and Brazil right at the top there, where the interest rate sits in relation to South Africa, you'll see from the emerging markets perspective, the basket that we play in, we're still relatively low. So that gives us still space to jack up our interest rates, which is not good for South Africa because we've got this conundrum at the moment of stagflation. We've got inflation still running high. We've got interest rates running at 7.75, and we've got no growth in this economy. We're actually expecting the GDP to contract by about 1% this year. So it's a big problem to find the balancing act to where we find ourselves and where we need to go. If you look at the rand performance for just the month of May, like I've mentioned when we started, you can see South Africa out of a expanded majors. It's Bloomberg, they track, it's the 31 most actively traded currencies in the world. And if you look there right at the bottom, the South African rand sits. Argentina peso is even performing better than us. And you'll see we have by a significant margin, we're much weaker than the rest of the world. Our emerging markets peers, the Russian ruble, the Mexican peso, Chilean peso, Peruvian sol, you can name them all. They're all stronger against the dollar. This is all based against the dollar. So this means the dollar has been under pressure a little bit. Emerging markets has been forming better actually for the year, but the rand for the last week has been the worst performer in the year. And if you go to the next chart, you look at the rand performance for the year of 2023, and here you can see how the rand is actually more underperformed versus our emerging market peers. So if you look at all these graphs, the orange line is the rand up there. You'll see we about 14-15% weaker for the year. And here at the bottom is our Hungarian forint, Mexican peso, Brazilian real, Polish zloty, even the Aussie dollar, which is here almost flat for the year. You see how weak the rand has performed. And at the moment is, like I said, we are finding ourselves trading with the likes of Argentina, Pakistan. It's all currencies that's actually more sub-emerging market currencies than emerging market currencies. The economies they've got war there, they've got other problems there, they've got like Pakistan, they've arrested their first prime minister. So they've got much more political problems, much more other problems. But South Africa is being priced in the same realm of reality as those countries. And that's again because if you read the headlines this morning, it's Paul Mashatile and his committee is finding technicalities to try and get Putin to come and visit South Africa for the BRICS summit. Foreign investors, people offshore don't like ties with Russia. They are scared for sanctions, they're scared for whatever, so they just de-risk themselves. They don't want to be in a country that's seen that it's aligned to Russia. And that's the reason why the rand has just been totally obliterated for last week, but actually for the whole year, we've been under a massive amount of pressure. So again, I'm just highlighting this red block here on the right-hand side. That's the wobble that was caused by the diplomatic chaos that we've. And the big reason is that is the US ambassador obviously raised it, and that's our AGOA partnership we've got with the US, where we export citrus fruit and other food products, even the cars, some of the cars that we build that gets exported. So a lot of this stuff is done under the AGOA partnership with the US. So people are scared that the partnership with the US is going to break up. They're going to impose sanctions. Although the US has come out and said they won't impose sanctions, it's all those uncertainties that linger that's caused the panic. The AGOA deal is worth about $4 billion worth of trade a year, which in the bigger scheme of things isn't massive, but it's not big enough. Our trade with Russia is only about $400 million a year. So you'll see it's 10 times bigger than trade with Russia, just the AGOA deal. And the US is still, in the bigger scheme of things, our second biggest export market where we export to. European zone is our biggest trading partner, then the US, then China. So all our trade is with Western countries, and again, they're de-risking out of South Africa because they don't like us, and our sentiment has taken a beating. It will take a bit of time for us to recover our sentiment. It's not going to happen overnight. and we can probably in for a little bit more pain in the short term. So if you look at US exchange traded funds, that's people that exchange traded funds in the US, hedge fund investors that invest in ETFs. You'll see just where South Africa ranks for the past week or so, right there at the bottom. Mexico has seen plenty of inflows, Chile has seen inflows, Brazil has seen small inflows. Then everybody also seen a little bit of outflows, but South Africa has been a massive underperformer. If you look at that on the right hand side, you'll see there equities took a massive hit. And equities in South Africa from foreigners has actually been bleeding for the last 3-4 years. That foreigners has just been selling South African equities. They're not investing in equity markets in South Africa. Bond outflows so far for the year, we've seen around $10 billion worth of bond outflows, foreigners selling our bonds. For the whole of last year, we saw about $16 billion worth of outflows. So, and the year before that, we also saw outflows. So just to give you a picture, in the beginning of 2019, foreigners held about 42% of South African bonds. That figure is down to 24% at this stage. So we've lost about 18% of foreigners that held bonds in South Africa. We've lost that money. It's gone. They don't like to be, even with the yields up here, they don't like the risk in South Africa. So we've got S&P ratings agencies that needs to make the announcement about South Africa's rating on Friday again. We don't expect a change in the rating. We're still going to be BB minus. But if you look where South African bonds trade versus in relation to where our interest rates is, the risk premium is around 520 points because we had 775 and our 10-year yield is trading roughly about just over 12% at the moment. So the risk premium, we're already trading in the risk premium as we are as a downgraded country that sits at B+, a 1B+. So it doesn't bode well. A lot of stuff's already been priced. So the picture and the risk sentiment to South Africa is not great at the moment. Again, I've just talked about the sentiment, but yeah, just showing you how weak the sentiment is towards the rand at the moment. It's the weakest it's been in the last 12 months. And if you look on the left-hand side, you'll see Brazil, the Russian ruble, Mexican peso, all of them, their sentiment's a lot better than South Africa at this stage. I spoke about the foreign bond holdings, but just to show you on the right-hand side, the black and the blue graph, you'll see as bonds, the outflows happens of bond, the rand tends to follow. It's a big barometer to see how the rand performs, and you'll see bonds have seen massive amount of outflows. We've seen that in 2020, where everybody was de-risking for COVID, but we caught all the flows back. But at the moment, it's just been a steady drip out of South Africa. And like I said, the outflows out of bonds has just continued on a steady pace. The other issue that's also bothered the currency this year is a change in the South African Reserve Bank rulings where they made a change in the Regulation 28 about fund managers in Africa that's allowed to invest offshore. They've taken that up, that the prudential limits now sits at 45%. So outflows out of foreign bond holders, the 45% prudential limit from asset managers that can take more funds offshore. Load shedding, grey listing, diplomatic tensions with the US, all of that has just been continuous problems for the rand. Then we get to the big thing. Aside from Russia, the other big thing that everybody's feeling and hurting, and it's a issue close to home, is the whole Eskom issue, load shedding. Again, headlines this morning, they said we've got to brace ourselves for more stage out load shedding in the winter months to come, which is not great. It just gives another drag on the economy. We can't get the economy growing. There's no willingness to get end load shedding. My personal opinion is I think they're trying to push through the Skull Power Ship deal that they want to do with Turkey. And And if we think the ANC worries anything about South Africa, I don't think so. I just think they worry about themselves. But again, if you look at Eskom on the left and on the bottom side, you'll see the electricity intensity from South Africa. You'll see in the years 2000 where our electricity intensity was divided by our GDP. And you can just see our GDP has grown slowly over the last 2.5 decades, but you can see how the electricity intensity has just fallen off a cliff. So total electricity production has peaked around in 2008, and it's just continually to go down. So nobody wants to invest in here. Small businesses get hampered. They can't keep the doors open. The mining sector, if you look at the mining sector, mining production month on month over the last 14 months has been down. And they can't run mines and operate at optimal levels because of load shedding. The other problem is, and finance guys, and we alluded to it, is with people struggling to make ends meet and businesses not continually growing, is the tax base for corporates is going to become lower and lower because profits are going to come down. And so the South African economy and the fiscus is going to sit with a real problem come the next fiscus, because taxes are generally going to be lower because of people that can't operate an economy that can't provide proper electricity for its working class. Then I'm just going to take a little bit back out and look at what we can see from across the world. And if you look here on the left-hand side, is just spoken about South Africa, but South Africa's equity problems and corporate earnings going to be down is not only just on South Africa. If you look at this, is the S&P 500 versus the CEO confidence, a measure that they measure from offshore. And you can see there on the blue line there on the left-hand side, our confidence has fallen off a cliff, and the S&P tends to follow. Interesting thing about the S&P 500 is it's up for the year, but it's actually only up because 7 shares has performed really well. Your Amazons, Apples, Microsoft, all your FANG stocks, that's the stocks that performed this year. If you strip out those things, the S&P hasn't performed. And the CEOs of all the companies offshore are warning us. There's no confidence. The outlook for growth and earnings is fallen off a cliff. And there's massive recession fears about what's going to happen in the US. So the other problem that happens with that, as soon as the S&P 500 starts selling off, there's an indicator called the VIX indicator. It's the volatility indicator, how much risk is there. At the moment, that's very subdued. But as soon as volatility picks up and the sell-off starts in the equity markets offshore, volatility tends to spring up. And that doesn't bode well for emerging market foreign exchange. In the times of fear, people run to the dollar. They don't want to be seen into risky markets like South Africa, Brazil, Mexico. So if the stock markets in the US comes under pressure, I think there will be another bout of rand weakness that comes. And that will just get added because at the moment we're just focusing on all the local factors, the load sheddings, the grey listings, the Russia diplomatic issues. So if the world also starts becoming more negative worldwide, I think there's another bout of rand weakness that's just around the corner for the rand. Again, other thing that's been highlighted across the world is the banking problems that there was. We've seen 3 big bank collapses in the US in the space of the last 3 months: Silicon Valley Bank and Signature Bank, the biggest of them. So it's all these smaller regional banks that is actually, those regional banks are actually bigger than South African banks, but they've been under pressure. And it's isolated to the US because the US structure is a very technical. The banking system in the US works a lot differently than it works in South Africa and the European sector. In South Africa, I think if we make a poll this morning about everybody's got a mortgage on here and we ask them who's got a fixed mortgage rate, I don't think anybody will say they've got a fixed mortgage rate. Whilst in the US, everybody has about fixed mortgage rates, about 30-year mortgage rates that's fixed at a certain rate. So what tends to happen is to have capital adequacy ratios in the banking sector in the US the banks needs to hold capital against the loans that they gave out. So these loans are going out 30 years, and generally they need to hold US treasuries to back the capital. So what's happened now, if you look at the bottom there, you'll see how quick interest rates in the US has risen. Now what happens is they've bought these treasuries yielding 0%. All of a sudden, the interest rates has gone from 0 to 4% in a space of a year. And all of a sudden, the capital they need to hold to fund the negative market to markets on their balance sheets for the US treasuries that's yielding so much negative drains a lot of capital. So all of a sudden, when your normal man on the street goes into the bank and they want to withdraw their money, all of a sudden, there's no capital available because they need to hold all this capital to service the market to markets on the US treasuries. And that's the hence, it's isolated to the US because of how it operates. In South Africa, it works a lot differently. It's a little bit technical, but I hope you get the gist of it. So it's isolated to the US. We don't think it's going to spill over into any South African banks. You don't have to worry about that. The European banking sector is also sort of isolated. Just to highlight that as well for everybody. The other factor that's been a drain on South Africa and emerging markets is the dollar liquidity cycle. So we saw in COVID, everybody prints cash, the economy is flash cash, but all of a sudden and then inflation runs hard, but you need to drain that liquidity out of the economy again. So the Fed has gone on quantitative tightening and raising interest rates to try and drain the economy. And they try to raise interest rates to get it to a more neutral level. So what we mean by neutral level is to get where interest rates are and inflation is at the same level, because then your real rates is zero. So at the moment, the US is just positive. The inflation is sitting just below 5%, and the interest rates are sitting at 5%. So they've got very, very small real interest rates at the moment. On the right-hand side, you'll see how a lot of the banks across the world, China, Switzerland, you can name them, ramped up liquidity during the COVID crisis. And you'll see now, since the start of end of 2021, ending 2023, how much liquidity has been drained out of the market. So by draining liquidity, there's not a lot of excess capital for people to invest. They're de-risking. So all of these issues together just places another burden on emerging market currencies like the rand. But what we do think is at the moment, I think central banks is at the top of their hiking cycle. I'm talking now about the developed market, not about the emerging market like South Africa. I think, like I said earlier, I think we're in for a little bit more pain. We can maybe see another 100 basis points over the next couple of months. But we do think that the Fed is sort of at their peak. We think the Bank of England can maybe hike a little bit more. European Central Bank can maybe hike a little bit more. But the market is already pricing that the US will cut interest rates by around 1% by June 2024. So in a year from now, we expect interest rates in the US to be sitting more around 4% than it sits at 5%. And that's because inflation will come off. We think there's going to be pressure in the US economy. And that doesn't bode well. So longer term, a year from now, it's a little bit more rosy for the outlook for the rand, because it tends, if interest rates dips in the US and South Africa's interest rates stays higher, the carry attractiveness stays there. People are willing to seek more yield offshore. So longer term, maybe we can see a recovery in the rand. Short term, very much under pressure in the currency. And again, danger of recessions. I've mentioned it earlier, just showing it to you. When the 2-year and the 10-year, when you 2-year and the 10-year yield curve inverts, it means that your 2-year yields are trading higher than where your 10-year yields are trading. It's sort of a precursor for recession. You can see here from the 80s, every time there's on the grays, every time the 2-year and the 10-year yields invert, it's sort of followed by a recession. So we're expecting a recession to come somewhere in the space of the next 6 to 9 months in the US. If you go across the world and you take the US, the UK, Germany, France, Japan, Switzerland, all of those yield curves, and you also do a weighted average yield curve, and that you'll see the 2-year and 10-year yield curves across the developed world is also inverted. And again, same scenario. As soon as that starts to get inverted, it tends to lead to a recession. So there's pain points across the world comes up. And again, that's all due to there was a lot of excess cash, and that excess cash needs to be drained out to get inflation back intact. By draining liquidity, spending money out of people's pockets, it tends to lead to recessions across the world. Then again, just to show you how undervalued the rand is, I've just put up 4 graphs here. The first one, top left, is rand versus the dollar. You'll see we were 20% undervalued from fair value, and we think fair value for the rand is around 17 rand to the dollar at this stage. We've adjusted it higher to price all the risk premiums and all the stuff that South Africa needs to deal with in, and the fair value for the rand against the dollar should be around 17. Against the euro, you'll see we're about 30% undervalued. Against the pound, we're in a real effective exchange rate basis around 15%. So our biggest undervaluation is against our biggest trading partner, which is the Eurozone. But yeah, we undervalued at this stage, sort of 2-3 standard deviations from fair value should be, but it's not going to reverse in the next week or 2 or 3. It's going to take a little bit of time. We need sentiment to go in our favor, and we need things to turn a little bit. And again, our partners that helps us with this ETM, they've got a sentiment indicator. And at the moment, we've highlighted, I've highlighted the top 5 on the right-hand side. You'll see where the rand currently trades and where the fair value indicator thinks the rand should be at the bottom, the black line, which actually looks red on this thing because of it's highlighted in red. So there's a big discrepancy to where we're currently trading and where the sentiment indicator indicates the rand. In bouts like this, when there's a risk-off scenario, the rand tends to correct back to fair level, mean reverts back to fair level. So the sentiment indicator, like I said, points to a recovery in the currency over the next 9 to 12 months. Again, it's not going to happen in the short term. It's a longer-term story. The dollar will probably be under pressure if the debt ceiling doesn't get resolved. If they start cutting interest rates, sentiment towards the dollar will eradicate a bit, and hopefully if our politicians can maybe get something right, just talk a little bit better, we can see the rand recover in the longer term. Just to end off a little bit with what we think, like I said, is inflation. We expect inflation to subside below 7% and keep towards the upper level of the 3 to 6% target range in the months ahead. The trajectory will be a little slower than we anticipated. I've spoken about the repo rate. We expect heights. We, on the fiscal side, we've got a weak economic growth outlook, disappointing tax revenue. It all is a risk to consider your investments in South Africa. Like I said earlier, I spoke about the GDP growth. We think we can contract by about as much as 1% in 2023, and we'll need to see how longer the sell-off will help. Will continue, as it also has an impact of inflation. The reason why it has an impact on inflation is the biggest thing that we import into this country is oil for fuel. So with the rand being up here, and oil price is not really subsiding, still staying hovering in the $70 a barrel, we importing inflation into this country. Like I said, we've adjusted our fair value from 1650 closer to 17. At the moment, we just hit by a perfect storm of bad news, but we'll need to see from there. I'm going to stop sharing my screen. I'm going to take questions from here. Thanks for listening.
Thank you, Vichard. Sure. Lots to take in. I don't think it's anything that anyone didn't know. It's just obviously quite tough to see it when it's, slide after slide after slide of it. But of course, that's how it is at the end of the day. If you don't have the information, you can't make proper decisions. I think one thing I just want to touch on before we look at the questions. So while you were speaking, I went and drew some year-to-date charts of a whole bunch of just Satrix ETFs, and it makes for very, very interesting reading. So Satrix 40 ETF up 7.75% year-to-date. Sounds good, more or less, until you go and put it in dollars, but we'll get there. then you sort of dig a little bit and you try to figure out, where did these gains come from? And it's pretty much all in the Rand hedges. So even in the resources side, if you draw the Resi ETF, that's down 0.9% year to date, and that's got gold in it. So that's quite hectic to see. The Divi Plus ETF, to my knowledge, that's got quite a bit of sort of mid-cap stuff in it, stuff that technically trades at quite high dividend yields. That's how it makes it into this ETF. That's down 9% year to date, because what's happened basically is investors are demanding an even higher dividend yield, and then unfortunately it hits the price of these shares. So they pay you a nice divvy, but then the share price itself takes a knock. The FINI ETF, that's down 4.7%. That's very much South African sentiment around our financial services firms. Everything that you've talked about now hits that definitely. And then the clincher, the S&P 500 feeder ETF, up almost 22% year to date. And that's all currency, right? I mean, yes, the US markets had a reasonable year, I think, offhand, certainly on the tech side. But, it's all currency. And I think the last time we did a webinar, there were some questions around, what do you do with equities in this environment? And I think from my perspective, at least, you've got to almost see the JSE at the moment as a way to swing trade, because it's very, very hard to pick stocks with local exposure where you can kind of just sleep at night. It's really hard to guess which of these local companies long-term will just keep on compounding. We've seen a lot of negative surprises. Every SENS announcement I read at the moment, with very few exceptions, is tough. So I think from my side, from an equities perspective, a lot of JSE trading opportunities, there always are. The dislocations of the market are always fun. But at the moment, certainly, if you're looking for stuff that helps you sleep at night, I think a lot of the international companies are a safer bet at the moment. But of course, as you've pointed out there, very oversold Rand. So, it's the old story. Eventually people go, oh my goodness, it's all over. And they take all their money out the country and they watch the Rand come back from 19 to 16. It's not easy. It really is not easy at all. So thank you for the time this morning on working through this stuff. Wichard, I don't know if you want me to sort of work through the questions with you. Do you just want to skim them? I know you sometimes do it yourself.
So
I'm happy with that.
we can do it together. I was right at the top, and I think Matt asked about what else we think about for interest rates for the rest of the year. I think we tackled it, Mac. I don't think the short term we're in for more pain. I don't know. What do you? I'm not sure if you agree with me, Mr. Finance Ghost.
Yeah, I would say so. I can't see. I think we were talking before we came on air, like, what are the near-term catalysts for everything to improve on this side? And I think more pain is unfortunately the theme for the rest of the year. I'm not seeing much on SENS that is particularly encouraging, I must be honest. And one of the issues is companies are needing to now basically build their own grids. So what we're doing is we're taking what should be an efficient centralized grid, and we're moving it from a public balance sheet into private balance sheets and asking everyone to basically build their own infrastructure instead of investing in their businesses on a central infrastructure. That cannot possibly be a good thing long term. Well, maybe long term it's interesting because it takes reliance off government. But the point is we shouldn't have to take reliance off government. That's the first principles point here.
Yeah, and I think Mac followed up with ask, how long will it take for South Africa to be taken off the grey list? So to be honest, I've got no idea. If we look at the political willingness of South African politicians to do anything, we beg the question is, will there be a willingness for them to do anything about the grey listing, or is it just, we're in the grey listing, we just live with it? At the moment, it just doesn't feel if it doesn't suit their narrative, I know it's harsh, it just does feel there's no willingness for them to do anything for the people in the country, for the people, even for their voters. It's just about for their own. So I don't think we're going to get off there soon, to be honest. But maybe I'm wrong. That's the only answer I can give on that. Gavin has asked, finance guys, that's more maybe towards you, because we're not an investment firm at all. So I can't give advice on it. But he's asking, what is a safe investment during these times? I don't know if you want to tackle that.
Yeah, I'm in the same boat as you that I can't give advice on it. But the reality is, look, if you're just keeping your money in your current account, you're not doing yourself any favors, right? You're not even getting the yield. You're watching your currency get worse. I think there's no safe investment. If there was such a thing as a safe investment, then all of our lives would be a lot easier. As Silicon Valley Bank taught us, even trying to go and buy US treasuries unless you can hold the thing to maturity, that's not a safe investment either. I think what we need to do as South Africans is you need to try and just be as good with your money as you can be. And I know that sounds utterly ridiculous, but we all have these things. We all have that subscription that you've thought about canceling, but you didn't. We've all got that money sitting in a current account where actually, to be honest, it could probably be in a savings account. Or take what's in your savings account and is available on zero notice. Do you really need all that money available on zero notice right now? Or can it be on 32 days or 3 months or 6 months? I think it's about actually getting those wins at the margin at the moment is probably the safest bet you can really make, because beyond that, it is exceptionally difficult out there. I wish we all had these answers. And that's why I say I'm sometimes jealous of the people who actually spend their day trading, although I'm sure they'll tell you how hard it is right now, is because if you're actually just, you're not trying to take a long-term view on anything. It's actually just swing trading a market that is full of volatility. Beyond that, it's difficult to say at the moment what is safe really. And that's why I say I would just focus on maximizing yield in this environment and kind of just waiting for some of the pain. What I certainly wouldn't be going and doing, although I read CMH's results and I shake my head every time, how many people are there going and buying really expensive cars and financing it all the way into what continues to be a rising rate cycle. That is super brave. I think stuff like that can be very painful.
Yeah, it's tough out there. Lance asked, to what extent is the government rhetoric and actual data issue a currency at the present? It's a massive problem at the moment. That's the short answer. Like I said, is the rest of the world doesn't like the alignment. Like I said, Paul Mashatile this morning saying we're looking for a technicality to get Vladimir Putin here to the BRICS summit isn't good. If we look at the rand is now trading at 1944 already. So it just gives you indication that it's all headline driven at the moment. The currency doesn't like the actual data is not too bad in the currency, and because our interest rate is a little bit low, but our bond yields are attractive. We've still got a trade data surplus. We're exporting more than we import. So a lot of the stuff is still going well for the rand. It's the headlines about the political unwillingness from our leaders and the alignment with Russia that's causing a massive headache for us at the moment. And again, to follow up, there's a lot of negative sentiments about BRICS currency. What's the benefits that Africa can gain from a BRICS currency? I don't think BRICS is actually just made out of China. If you look at China, so it's Brazil, China, and South Africa. It's made up out of BRICS. But if you take out China, then you take about 80% of the power out of BRICS. So South Africa is so small in that basket. We stand to gain nothing. We stand to lose a lot more from alignment. And getting a BRICS currency, it's all well and true, but it's so difficult to get a central currency. If you go ask the years to get to the euro, and if you go ask the guys in Germany and France, are they happy with it? They will all probably tell you no, because something happens in Greece, but it spills over into Germany. So it's not Germany exports, so they want a weak euro, but guys like Greece imports a lot, so they want a strong. Germany wants a strong euro, and someone like Greece wants a weak euro. So it's too difficult. I think we're years away from having a new currency like a BRICS currency. Again, there's a lot of talk about de-dollarization. Yes, de-dollarization is the big buzzword at the moment, and everybody wants to trade in their own currency. But again, maybe it started, but it's not going to happen overnight. It's not going to happen in the next year. It's probably going to take a decade plus for everybody to have de-dollarization and trade in their own currencies. And the only reason how you can trade in your own currency is, let's say Brazil and China wants to trade in their own currency. It needs to trade through something else like gold, because if you trade, otherwise everything else, if you trade currency to currency, it all goes through the dollar, because it's the world reserve currency. And you actually trade, let's say you trade euro rand, you actually trade euro dollar, and dollar rand is two separate currencies. And the same with one Brazilian real, you'll trade dollar one and dollar Brazilian real. So all trades through the dollar. So you need to find a different medium to trade it through, and that's probably gold or something like that. So just to let you know about de-dollarization and all of that, it's a great concept on paper, but in reality, it's not that easy to implement. Yeah. Finance Ghost. I don't know if there's anything else from your side, but I think we can wrap it up from here.
Yeah, I think so. There were some questions around like, I'm earning money overseas. Do I bring it back every month? I mean, we wish we had the exact answers for these things. Unfortunately, no one does. So, that's something around just keep an eye on things and do things that are sensible. And I guess that's the message that I just want to leave with everyone in this environment is just de-risk yourselves where you can. Honestly, that would be my overall view is don't do crazy things in this environment. And as I said earlier, I think it's about maximizing, every cent of that income statement of yours. You can't really control what you're earning as a South African. Sometimes you can, but a lot of people just simply cannot. You can certainly control what they're spending. That's why I'm so bearish at the moment on something like multi-choice. I look at what's going on around me and I just think, sure, of all the things that people can be canceling in their monthly budget, when the TV's off anyway and things are tight, so it's a tough environment. It's a tough environment for stock picking, but the opportunities are definitely out there. There are still companies doing very well. RFG Holdings gave us a nice upside surprise the other day, and that's part of their export business doing well. So, just keep your wits about you. I think read as much as you can. And from an investment perspective, just don't do anything crazy and try not to panic. It also probably doesn't make sense to empty every rand you have into dollars at 19 rand. Maybe over the next 20 years it does. We don't know. But then you've got to be prepared to watch the thing come back to $17 on a headline and feel very sad about it. So that's why we do these webinars, is to try and help people understand what's causing the volatility and to try and just give you some information behind all of that. And Vichard, I guess from my side, thank you for all of the daily insights in Grossmail. I think it's a really important part of the mailer. I think a lot of people get a huge amount of value from it. I know I do. And to those who have attended, keep reading Grossmail every day. We'll keep doing our best to bring you the right stuff that you need to be reading. And good luck.
Yeah, thanks everybody for attending. I don't know if we had a crystal ball and know exactly where the currency was going, I certainly wouldn't be presenting webinars this morning to everybody. I would be probably sipping cocktails later today on my sailing yacht in the Bahamas. But we'll be sending out a recording. Like I've seen a lot of people requesting a recording. We'll send out a recording afterwards. Thanks for attending. Have a wonderful day. And just want to end off, this too shall pass. The issues, it's always darkest before the dawn. So we can only hold on by a glimmer of hope so we can get out there. And like I said, this too shall pass. Enjoy your day. Cheers, everybody.